I'd love to just jump into it, Sasha, and talk about the last, 4 months, which have probably been some of the craziest, maybe even you've seen since 2016. Tremendous price action of waves and everything else. Obviously, algo stable coins getting depegged in different places, lots of volatility, some CeFi institutions kind of failing like Celsius and the like. What do you make of the last 4 months? How do you try to put that in perspective when you talk to people?
Yeah, actually, it was pretty crazy because as you mentioned, I've been in crypto like for years, probably actively since 2014. So it's like maybe 8 years of like active development in crypto, and I've seen a lot of those like cycles. But this cycle is very different. So maybe something has really changed, because we have like new players here. We have like big funds, non-crypto funds who are interested in crypto space, and they have a lot of experience with trading, and actually they found a very nice market for like their operations, I think. So we have like new players now that we didn't have before, and it has changed things like considerably, because we can see that some like setups, some like, for example, algorithmic coin setups that were like good a year ago, like Luna. Nobody questioned whether Luna was like viable product. They turn out to be very weak, and very easy to manipulate, because just nobody tried to do that before. So I think it's a new page for crypto, because you have new actors, we have like probably more money, and we have to think where we go from here, because I think crypto is not only about trading, about like market trends. Crypto is more about like changing the society. People tend to forget about it, and I think without those applications, I mean DAOs, all types of like governance applications, we won't be successful financially either, because we will have too much manipulation. You can see those issues with CeFi platforms. When you have like basically non-crypto products working with crypto, it just can't be good. It always will be bad. You have to create decentralized exchanges. You have to create decentralized products that work with crypto. If you try to combine centralized approach with decentralized approach, it's never going to be good. And this is a proof, basically. We can see that all those CeFi products failed miserably. And we really need to focus on creating decentralized infrastructure for crypto. It might sound like a little bit strange, but it's true, because most infrastructure that we have is centralized. Exchanges, centralized, DeFi, custody, it's all centralized. And it's probably, it was good maybe a couple of years ago for mass adoption, but now we can see that we have too many issues with this. So we have to focus on decentralized exchanges. We have to focus on DeFi versus like CeFi. And only in this case, even if we focus on purely like financial monetary applications of crypto, like not like mentioning some kind of like DAO products, only in this case, when we are able to create decentralized infrastructure for crypto, we're going to be successful. We won't have those crazy ups and downs that actually is very bad for crypto. They're bad for mass adoption, because so many people got burned with Luna, and I'm not sure that they're going to be coming back to crypto, because the damage was like immense, and people will never trust crypto again, a lot of them. So it's not good for crypto. So if we really want some kind of like mass adoption, we have to focus on like native crypto products, that is DAOs, DEXs, and so on and so forth. And I think it became very clear during the last like 4 months.
And when you're talking about these CeFi institutions, which ones are you specifically talking about? Hey, it's Brian Rose, founder of the DeFi Academy. I've told you my 4-week crypto bootcamp is amazing, but don't take my word for it. This is what my students are saying.
The DeFi Academy was an amazing experience for me. It took me totally out of my comfort zone.
In this course, I was challenged, I was held accountable, and pushed to do things that honestly weren't always easy.
It's been phenomenal, and I can't believe we're already up on our 4 weeks. It has flown by.
Going through this DeFi accelerator by far was one of the best courses I've taken.
You do this course, you really get into the nitty-gritty of the activities that will make you comfortable with decentralized finance.
Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Anybody else that wants to do it, please sign up. It is well worth the money.
Yeah, I don't want to mention the names, but I can mention them because everybody, know them currently. Celsius, like some other companies, their setup was like very, attractive for entrepreneurs, because you saw such an opportunity with DeFi, and DeFi is very sophisticated for many people. And they just wanted to simplify DeFi, just to provide some kind of like custodial platform where people could just deposit their crypto and earn like 10% APY, like much more than they earn in their bank. And it was very lucrative opportunity for many entrepreneurs. And I think we couldn't really have avoided this, because it was such like an obvious opportunity for many people. It was quite obvious as well that it actually could lead to a lot of problems, and that is what happened, because people actually thought that crypto was kind of immune to general market trends, and when broader financial markets, like larger financial markets, started to become bearish, the impact on crypto was very, very big and pronounced, and people just didn't expect that. For example, as far as I understand, through Arrow Capital, with their theory of like super cycles, they basically believed that crypto would be going up forever, So, but it can't happen, because you have new actors, they bring new money, they bring new tools to impact the market. I won't say the word manipulate, but there is some impact that we've seen with waves as well, actually. And crypto is not immune to those things that have been working in traditional financial markets for centuries. So just people started to use those tools, and now we have what we have.